Hey traders, in this video I'm going to tell you why I agree with Peter Schiff saying that gold stocks are going to skyrocket very soon. Let's get straight into it. Hey you, don't place a trade based on what you're seeing in this video because trading is difficult, right? There's so many areas you need to know to become a good trader. Trading systems, mindset, the foundations, chart reading. There's so many areas you need to know to become a really good trader. So this video here is to become educational only, and there is no guarantees of making any money on any single given one trade. So be smart about the way that you're trading and protect yourself. Also, grab a 100% free brand new 12-hour trading course, foundations, chart reading, trading systems, and so much more, mindset. Link in the description. Go click it right now. I'm giving away 100% free access. Link in the description right now. All right, traders. So today I want to talk about obviously Peter Schiff, and he's been saying now for quite some time, probably for the last say year or so, that gold stocks are going to go ballistic on the upside. They're going to skyrocket on the upside, and I'm going to show you technically reasons why I absolutely totally agree with him. Now, it's not my opinion, it's based on what I'm seeing on the charts. This is something I've been talking to my private clients for quite some time, and I actually have my raw money and a decent position done in bullishness using the GDX, GDXJ, and JNUG and stuff like that. Okay, so I'm not just talking about like what I think is going to happen. I've actually got my money in this. I've got a decent position waiting for this to happen. So there's a lot of things I can share with you by looking at these markets. Okay, I'm looking at the GDX and the GDXJ. I'm just going to focus on these two indices, or these two ETFs right now, because they're what we need to look at. Firstly, the gold stocks right now have been holding strong while silver and gold have been selling off. That's actually a very good sign. Secondly, there's no way. Gold stocks are not in a bubble right now. They've been correcting. They've been very quiet, going sideways. So therefore, to me, that tells me that the market is now likely to see some more upside very soon. Now, we don't know when that soon is. What we're looking at right now is the GDX weekly chart, guys. And so therefore, we're looking at a bigger picture here. What I do want to share with you on a short-term time frame charts, and I'll give you the ultimate big picture here, is this. By looking at the GDX, what's happening right now in GDX on a longer-term time frame chart, weekly chart? We had a lower high, lower high. We made this higher high, and we still made this higher low through here. So until this higher low through here is broken, the overall major trend has changed when this happened through here. Okay, so it's the overall major trend. Now, let's actually continue through here. If we actually look at what the market is telling us right now, then therefore I believe, or by what the charts are telling us, that I believe that yes, we may be getting a bit of a shake and bake on the downside on the gold stocks, say the gold GDX and GDXJ. We may be getting that, yes. But if you look at what's been happening through here, right, it's like the market goes through what I call a time and price phase, or price and time phase. It has a big run up. It created a massive higher high for this here. It had a pullback and went sideways. This is what I call a time phase. Price phase when the market's having a big run. Now it's time phase through here. So the probability is probably 80% that we're going to see the move to the high side, especially after this market going for quite so long. The market's going to go ballistic. I totally agree with that. And the reason why I say that is if you squeeze this chart up, based on everything I just said there a minute ago, but if you squeeze this chart up, we've never seen the GDX go as quiet as this right now. And if you look at any chart, and if it goes sideways for a long extended period of time and doesn't do much, guess what? It doesn't matter whether it's a Forex chart or it doesn't matter what chart it is, how the markets work is that's what you call the time phase. And when there's too much time, price needs to catch up. Time is when the market's resting, and then price, and if there's too much time on the chart, i.e. you get too much sideways movement, the market goes ballistic. I'll give you an example of a trade that I did based on that thing there, right? So this was AGYS. This is a trade that I did just recently. I'm not going to get into the details. I bought some options on this one here, right? My private traders know about this. But see how this market went sideways through here for an extended period of time? Guess what? This is now what we call a time phase. And because this has gone through an extended period of time, when the market starts to break out, guess what? Price needs to catch up. Because now they're not equal, right? We had so much sideways, price needs to catch up. So therefore, we go through what? We go through a bit of a trip. We go through a bit of an extended move. So that's what we're seeing now on the GDX. But that was on the daily chart. They go back to the weekly chart of the GDX. But what else are we seeing on the GDX right now? Let me show you this here right now. So I've obviously drawn these in already, and these are the charts that I keep an eye on. And I'm looking at the silver into ETFs and stuff as well too. But why I believe that we are likely to see a big bull run, a big massive run in gold stocks over the next, say, but by the end of, say, next year, we would have, I believe we would have seen a massive bull run in the markets. Now, I don't know that for sure, and I have my money on that. And so therefore, don't just place a trade based on what you're seeing and what I'm seeing here. Right? There's no guarantees of making this money in one trade. I do have a good sized position on bullish the markets, but I'm sharing with you right now that the gold, as you can see here, the GDX has made a massive invert head and shoulder, and you can see the neckline is 30. That means that on a short-term target, I have a target of back to 2016 highs, a short-term target of $30. Once $30 is broken, then the projection, you measure from the head up to where the previous resistance is. So you measure from here up to here. And guess what? Project that up. And so therefore you get a $50 GDX. That's what I'm seeing on the GDX. If you go to the GDXJ, guess what? I'm going to take this off here. Go to the GDXJ, which is even more of a what? Time phase. Look how quiet this is. The market's going to go ballistic. But guess what? Where is the probability, right? Because everything's about probability. Where is the probability that the market is likely to go ballistic? Where is it? Is it up or is it down? Well, this is what I see in the markets right now. And then I see what? I see this here right now. Now, what am I drawing through here? What is this here right now? Big shoulder, big head, big shoulder, right? So this is a weekly chart, remember? Not a daily chart. So the up and down on day by day can do that. But once again, we get the major high, everything I said on the GDX. So therefore, that tells me that we're making this major bottoming pattern. Where is the projection? Well, you do the what? You do the exact same thing, right? You do the level up through there. Then what you do is you go from the bottom through here. So you go into this head point through here, extend up to the resistance point, bring that up through there, and guess what? Now we have this level through here, which is probably around the $90 level, which is going very, very, very close to these levels through here, probably a bit higher. That's where it's probably likely to run to. But the first target for me is $50. Why? Because it's just that's just like a 1-to-1 projection, $50. Once $50 is broken, then we're probably likely to see around 90, probably even a bit higher, where you get the next resistance up through there. So therefore, what I see is one of the greatest opportunities right now is the GDX and the GDXA. This has nothing to do with the gold individual stocks. Okay. What you do is you do analysis on that stock and you go based on what that chart is telling you, nothing else. Just because the GDX and GDXJ are going to go ballistic, what I believe, some gold stocks won't. Some stocks will just go sideways. Some gold stocks will actually go down. It's the way. It's like saying that the Dow Jones is going up all the time, so therefore every single stock in the Dow Jones is going to go up. No, that's not true. What tends to happen? What tends to happen? Well, if you look at the Dow Jones right now, right, you see that the Dow Jones right now is what? It's been going sideways, but guess what? Guess what? A lot of the stocks have been doing overall. The big stocks actually been trending down. JP Morgan, Goldman Sachs, all going sideways with it. So therefore, what I'm trying to say with you is that you don't do analysis on the gold stocks indexes like the GDX, GDXJ, like I've just done for you. And then suddenly go, well, I'm going to go buy First Majestic because I think, because this chart says the gold's going to go ballistic, so I'm going to go buy that. No, you get in based on what that chart is telling you and nothing else. Because no matter what you think, even if the GDX and GDXJ do go ballistic, I guarantee you there's going to be a 20%. There's going to be 20% of the stocks that actually end up going down. That's just the way it is. So do your analysis and only trade based on what chart. That's the reason why I've put a position on the gold indexes itself, not the gold stocks. Why? Because the gold indexes are telling me this is the chart that looks nice for me. So therefore I'm going to trade what the chart is telling me. I hope this makes sense, guys. I hope you enjoyed this, and I'll see you in the next video.